I'm hoping Tomas is in the room. He is, excellent, right, okay, because Tomas is going to come up and give the next keynote. So just by way of introduction, he's the director for business development at Firefish. He leads building Bitcoin collateralized credit rails with experience at Goldman Sachs, CEZ, BCG, and ADL. He blends finance, energy, and strategy expertise and holds a master's in finance from Charles University. So Tomas, please come up and take the stage. Thank you. Good luck.
Ladies and gentlemen, can you hear me? Yes. Ladies and gentlemen, good afternoon. My name is Tomas, and as Daniel mentioned, I lead business development for Firefish. How do I move slide? Yeah. Here it is. Some of you are probably saying right now, "Oh my God!" But you've already mentioned that you are used to. Daniel already mentioned he's used to speaking to 2,000 hoodies rather than to 200 suits. So I'm very interested. Who of you has no clue? Oh, here it is. Who of you has no clue what these words mean? Show of hands. I was don't be afraid. I'm really hoping there are some people that don't know, because that's for the presentation is for you, right? Okay, so we'll have a Q&A. We can talk later what it actually means. I'm not going to go through that. Waste of time. But I'm really happy that we have some people who really don't know what these things mean, because it means that you are fresh. Anyway, we've been talking about how to make Bitcoin useful since yesterday. And I think it was Mark yesterday who mentioned, was it Mark? I don't remember the name. Gentleman on the first panel, he mentioned, well, that his vision is mortgage where you mortgage Bitcoin against the house. Well, I actually was on a panel last week at the news media here in Prague, and I have received the very same question. So people are aware. This is a topic, and yes, you can do that already, but you have to go through fiat today. And this is how Bitcoin can be useful. And why I'm talking about the mortgage is because the mortgages are the most common asset used for credit worldwide. Mortgage is from Norman French and means a dead deed. The deed dies when you repay. The deed is to forfeit the asset, and the deed dies when you repay. Mortgages date back 3,000 years, roughly. And the modern mortgage, as we know it now, has been here with us approximately 100 years in Anglo-Saxon world. I think in Czech Republic, maybe bankers helped me. It was last month when we had 30-year anniversary. Yeah, last month? Yeah, last month we had 30 years anniversary. And in this time, the mortgages has become the biggest credit, or the real estate has become the biggest credit asset in the world at $152 trillion. I'm using American scale, 1,000 million, billion, trillion, so 10 to the power 12. 152 times 10 to the power 12. That's what the global value of mortgage real estate is today. The question that we ask is it the best asset for a collateral? Well, I don't know. And what do we do when we don't know today? We ask ChatGPT. This is what ChatGPT told me. I didn't ask what's the best. I asked, like, give me some structure. And this is what I had received. Yeah? And then I have received also that the best institutional, and it was strictly speaking institutional, the best institutional collateral is securities. But not everybody has access to securities, right? Nevertheless, The real estate is the biggest. Let's see by how much. I already mentioned 152 trillion. Securities are second with 45 trillion. Bitcoin is far, 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 far behind with 40 billion today, 2025-ish. That is 3,800 times less, or the other way around. The real estate is then 3,800 times bigger than Bitcoin. Well, and what we think is going to happen, and why is this? And this is my 5 cents on the topic. I believe it's because of the credit market infrastructure. Mortgages have developed secondary layers. There is path dependence. We have ecosystems. Salespeople are really trained to sell it, etc., etc. Several reasons. I really hate lists, so please read it. I don't remember them, but these are the reasons I was able to come up with why I think this is the case. But it doesn't need to be this way. We believe that Bitcoin is going to grow like 20,000%. I mean, Bitcoin. When I say Bitcoin is going to grow, Bitcoin collateralized credit is going to grow 20,000% in the next 10 years, we believe. Part of the growth is obviously going to come from the growth of the asset base itself. However, the big part of the growth is going to come from the usefulness. And this is what we've been talking about here since yesterday. And we believe that the growth, today, probably 2% of Bitcoin is being collateralized. We believe that in 10 years, it's going to be roughly 40%. Why 40%? Well, because we think that Bitcoin is going to be mature. And when we look at the developed world with prism of real estate, that's where, and I had the number somewhere in the deck, real estate is roughly 40% collateralized in developed countries. Some countries more, some countries less, but it's roughly 40% collateralized. And why do we think this is going to happen? Of course, there is innovation. That is first thing. Without innovation, we wouldn't have that. Obviously, we have good setup. We believe it's right time, right place. But what is really going to happen, and I've heard it several times in this forum since yesterday. Regulatory events are really supporting Bitcoin to become standard financial instrument. I didn't hear this sentence, but many people mentioned things which actually mean the same. We've seen in the US, we've seen development of the global travel rule. This will help, although it's a nuisance for us, but it will help. There is some treatment, how you treat crypto assets, how do you treat exposure. SEC approval recently for exchange-traded products. EPTs, Genius Act. Genius means, I've looked into that. Genius is actually an acronym. So it's not genius, but it's an acronym. I don't know what it means again. Nevertheless, we have MiCA here in Europe. MiCA is going to help greatly with both institutional adoption and some credibility. We have DORA, which is part of MiCA. In Czech Republic, I've already heard this tax treatment. Somebody mentioned it earlier in the panel. Grandfathering for MiCA with caps, etc., etc., etc. So the regulatory events or the regulatory environment is really supporting. And how do we, as Firefish, come into place to help this? So we do help to create this usefulness. And I've heard three, again, in this forum, are three ways how Bitcoin can be useful. It can be it can be an asset, which it already is. It can be means for payment rails. It's being developed, and it can be a collateral. This is how we help Bitcoin to spread. So what do we do? In 5 words, we provide non-custodial Bitcoin-backed lending. Maybe 6 words. Bitcoin-backed collateralized lending. I don't know. well, 5-6 words. We run an open market. In this open market, you have obviously two sides, borrowers and lenders. So what borrowers can get is fiat or cash or whatever you call it, stablecoins, which are permissionless after KYC, asterisk. They need to pledge Bitcoin as collateral. What lenders get, and this is really important, we have created essentially zero credit risk product. So you are getting a zero credit risk product. Again, zero credit risk. I don't say there are not any risks, but the credit risk is zero. And you receive very competitive interest rates, which is somehow showing to the fact that there is high demand for the service. And how it works? So we have basically three players or three actors. One of them is borrower, one of them is lender, and one of them is escrow. Escrow actually is on Bitcoin blockchain, so we never take ownership of the assets. First thing is that borrower and lender use marketplace to conclude a loan. Then borrower pledges collateral, lender provides cash. Then they happily leave until maturity, and at maturity, borrower returns the money, and payment oracle releases Bitcoin from escrow. If 2A, which is loan being duly repaid, does not happen. So again, if loan is not duly repaid, then it's either price oracle or payment oracle releasing escrow, releasing Bitcoin from the escrow to the liquidation address, and then the lender is satisfied either by receiving Bitcoin or by receiving liquidated cash from the Bitcoin. This is how it works. So, how we grow? Fast. We have grown 1,500% roughly in the past year. We have already provided more than 116 million of loans, $116 million of loans. Outstanding notional that we have as of end of October runs at $86 or $7 million. The difference between loans notional and loans outstanding is what has already been repaid. We have 23,000 users, 16,000 transactions. We've processed 300 million of collateral. The default rate that we have is 0.02%. People really don't want to lose their Bitcoin. We have a way how we allow for increasing the collateral in the case of margin call. And the default rate, which is here, doesn't mean that the lender is not getting their money. They are getting their money. We just need to liquidate the Bitcoin to get their money. Our average LTV is 45%, so it's not our starting LTV, it's average LTV. So when you pledge, it's 50%, but as Bitcoin appreciates, the LTV goes down. So it has appreciated most of the time for most of the people. Our average is 45%. And we also calculate interest earned and value saved. So people paid roughly 1 million of interest so far. And these people who paid 1 million of interest saved 16 million in appreciation of their holdings. So they are 15 million better off, as if they sold their Bitcoin, plus the tax advantage. This is not a taxable event. How to use Firefish? Well, you can either pledge Bitcoin and borrow against Bitcoin, or you can use your unused cash from the treasury and generate return on it. The table behind me is the average interest rates for different currencies as we have seen last week. Q&A. How much time do we have?
Yeah,
5 minutes, 20 seconds. I was fast. Go ahead.
Where do you get your price oracle?
We run the price oracle at the moment, but we have built the infrastructure the way that it is possible that in the future, and we plan to do it, that Oracle can be a third party, which we would really love to do in the future. Excuse me?
I'll pass you the mic. Then we've got the question for the cameras.
So that means you have the keys from the Oracle.
The keys, the transactions are pre-signed, 3 out of 3. We throw away 1 key, and the Oracle so it's already decided where it's already decided that bitcoins go either left or right. It's either borrower's address or either liquidation address, and the Oracle decides which one it is.
Question here.
How are the loans priced, and what are the average
It's a marketplace.
yields?
It's a marketplace, so people are allowed to place bids. The offers are, and you are hit as an investor. You are hitting the bids in the future, and we've done it because at the beginning we didn't have enough liquidity. Now we have enough liquidity, so we are working on a way that we will publish two-way marketplace, so you will be able to see the bids and offers in the near future. So we don't price it; it prices itself.
The question was average yields. Yep.
That's it.
Any further questions? If not, I'll ask one. Do you have any kind of insurance in place for, let's say there was a flash crash, like the fat finger event where you've gone to sleep and Bitcoin's dropped by $50,000 overnight?
The liquidations start at 60. Our highest placed liquidation is somewhere at $65,000. So if Bitcoin drops 50%, so 50,000 today, as of today, we are really confident that we will be able to liquidate that. And just bear in mind that part of the liquidation is in the picture I had there. I was showing you that you can be your own liquidator, right? So you can either self-liquidate or you can receive cash. Not all of the loans are Firefish liquidated. So many of the customers are actually choosing Bitcoin liquidation. So it means that they receive Bitcoin and we don't have to go through an exchange. If there are no further questions, I'm happy to answer whatever you guys want to know at the coffee table. And thank you very much.
All right. Thank you.